So I'm here with Dustin with Momentum, and just want to thank you for sitting down with me for a second
absolutely.
and having a talk. I just want to hear what you guys are up to lately. What's new in the Momentum world? What are you focusing on as the market kind of pivots this way and that way?
We purchased a deal kind of last fall. That deal, we own the deal next door, so it was very attractive.
Nice.
From that perspective. That deal we purchased, it was newer vintage, 2018. We know the submarket super well because we own the deal next door. We've owned that one for about 5 years now. And so anyways, attractive cap rate, attractive price per door. The seller needed to sell. They need liquidity. The deal itself was fine, but they need liquidity because they were in other deals that are not doing so well.
Okay.
So we were able to purchase that. So we did that last fall. We've had a number of refi stuff that was on a bridge loan, and so we've been refining those to fixed rate just to put the deals in a good spot. But overall, we're excited about this year. We went to NMHC. I think there was, I'm trying to think of the right word. There was optimism, but it was a tamer amount of optimism. There was optimism though, I think this year, from what we're seeing a lot of opportunity. We're seeing most of the deals that we're looking at are unfortunately owned by the bank, or it's basically at the doorsteps of the bank, and they're selling it. So it's there's a lot going on. There's a number of deals that kind of came out initially. A lot of the deals though they're waiting to release those, and the reason why they're waiting to release those is this particular over the holidays is usually a tough time to lease and all that. It was particularly rough this year, and so their financials were not great, and so they're not releasing those until either kind of late spring, maybe summer, just to let the financials get 1 or 2 months of good financials under the belts before they release more.
So give me kind of an overview of Momentum right now. Like, how many assets have you guys purchased overall? How many of those have gone full cycle, meaning they've sold, and how many are you holding? And yeah.
Yep. Right now, I had purchased 10 assets prior to Momentum, and so out of those 10, have sold 9 of them. The 10th one's on the market right now.
Okay.
And then under Momentum, we have 1,800 units in Houston, 8 assets. We're actually putting up. We like to cluster things together. And so we're actually putting up a billboard here pretty soon, and we'll be able to split the cost over 5 assets, and so it'll be pretty low cost, considering the cost of the billboard. So that's kind of what
This is a billboard for?
Multiple assets for leasing.
Oh, for
people.
leasing.
Yeah,
leasing
yeah,
billboard.
sorry.
Got it.
Yeah, for people to lease. So it'll be not too far from like Houston. So. And then the deal that I'm selling right now, bought it in 2019. It was on fixed rate debt. So this deal is in Abilene, and so because it's a terrible time to sell right now in general.
Oh, yeah.
So the only reason why we're selling is because Abilene is leading the country in rent growth. We're getting double-digit rent growth right now, and it's all because of the AI stuff. So Stargate and all the big AI stuff is pouring into Abilene, which I don't really understand why Abilene, but whatever, we'll take it. So we should be, we actually have one LOI that's really attractive, so we may go ahead and just kind of move forward with them. They're a proven buyer in the market. So we'll see, but even in kind of honestly a terrible time to sell a market, it'll be a 2x return plus.
Sweet.
So yeah, we're excited about it. But it was kind of, it was the asset, because we've owned it, for I guess 6-7 years now, and it was at a point. It's 80s product. It was at a point where we either need to refi, inject more capital, or we need to sell. And we're like, okay, AI's Abilene's doing great. Let's just go ahead and sell. There's not too many sales going on where people are getting, money back and then a return on top of that. So we thought that'd be kind of a good win for everybody.
That's definitely a good win.
Yeah.
So you mentioned Lake Houston, so that's one I'm invested in, right? And brought some investors too. How's that area in general? Because we had demand supplies shifting kind of everywhere in that area. But tell me a little bit about that area.
Yeah, I mean, to be honest, that pocket's been pretty challenging, to be quite frank. We have there's one deal that has really struggled. So they bought in at and we talked about this before. I think they bought in at $226 a door, and we were $80K below that per door. Nice so it's that's a tough spot, for them. And so they've been trying to figure things out. They've dropped rents significantly. So it's kind of that.
Puts pressure on Lake
it's put a lot of. It's just been pretty challenging there. But and there's some other changes that we've kind of made too. In general, like I'd mentioned. The market in general, the last few months, it's over the holidays and all that, it's been challenging everywhere, but it's been a little more challenging there just because of a lot of it's due to that asset.
Yeah, you're competing with an asset that's struggling to the point that they're dropping rents, right?
Yep.
But as far as supply and demand in that area, do you see that picking up in the future?
So supplies in Houston in general is just falling off a cliff right now. So the supply this year, I think, is 6,000 to 7,000 units. 24 was like 25,000 units. So it's a pretty big drop off. Last year was 12, 14, something like that.
Okay.
Next year shouldn't be much at all.
If anything.
So and a lot of people continue to move to Houston. So I think we'll be in a pretty good spot. There's just there are some deals that that like that one deal I mentioned. There's deals like those across Houston that are kind of creating issues for that submarket. So.
And when we're talking about supply, we mean like new supply, new things coming on market that would compete with you or bring down. What you can offer rent, because they'll have all those concessions and things. So so it's nice that that's not happening. And the nice thing, of course, is most of these assets you're looking at a long-term hold.
Right.
So any one snapshot in time is not an indicator of everything. And I think Lake Houston, that one was just a year and a half in. Is that where we're at on that one?
Maybe.
2 years?
Yeah, 2 years.
2 years.
Yeah,
2 years
I want to say it was. Let me think. Was it December of 24?
That sounds right. It was a December for sure.
Yeah,
it was.
Yeah.
Okay,
So I guess
a
year and a half. Yeah.
So good. Yeah. So we got quite a runway on that to go. So that's nice. That's nice. All right.
Yeah.
Well, anything else you want to share that's on the horizon for Momentum? Anything new? Has your buy box changed at all, or
no?
You're pretty much staying in your niche and in your area.
Yeah. So our buy box in Houston is 90s and newer. We want to stay outside Beltway 8. Our preference is kind of north in general. That helps out with insurance and all that. In general, we've seen insurance come down, which has been good.
Finally.
We've seen property taxes kind of come in a little bit as well. And then in Dallas, our buy box is 80s and newer. Just want to be just well located is a big factor there. I started out in C-class space, and that space to me is anyways, everybody has different opinions and all that, but that's a pretty tough space right now, especially on the larger side. Because I was talking to someone that does C-class, I was like, look, if I'm doing C-class right now, which I don't want to do, but if I did C-class right now, it'd be like the 100 unit ish, because you have an end buyer. The problem right now is if you buy a larger C-class property, who's your end buyer?
Oh, yeah.
And so I was talking to a friend that was looking at a larger deal, and so I think one thing that we've been really big on is just kind of what that end in mind kind of looks like, and just trying to map that out as much as we can. So but in general, I think the market I don't, not good at timing anything. Crystal ball broke a long time ago, but everything we're seeing feels like we're at the bottom, and we're seeing some pretty interesting stuff. A lot of the stuff coming out. I mean, I'll give you an example. There's one deal we were looking at. They bought it. The seller bought it for $140, $150 a door.
Okay.
The lender basis is $120 a door, and the whisper right now is about $90 a door.
Oh wow.
Yeah. So we'll see if the lender is willing to take that much of a haircut, because that's it's going to be a few $million.
Significant haircut.
Yeah. So we'll see. But
those
we're seeing a lot of that in the market right now.
Yeah.
So.
Well, once you hit the bottom, there's only one way you can go, right?
There you go.
Yeah.
Yep.
All right.
Yep.
Well, thank you so much
Awesome.
for taking the time.
Yeah.
I appreciate it.
Thank you.